Good morning to all Elliottians, wherever you're watching us from today, and welcome to another Markets and Waves video. Week of the 19th of April starts today, Monday. It could be a very interesting week as we near the end of the month. And we'll have another 5 assets to analyze with you here today. We're going to start with the US index, then have a look on the euro dollar, pound dollar, the US oil, WTI, as well as the S&P. So starting off first with the US index, of course, we go on the 1 hour as always. Last time we were talking about this move on the downside, looking like an impulse, right? And since we are pretty much identified here a reversal point with this triangular completion, we are, and I am, projecting that this is the end of wave 1, and probably we're going to start moving higher to get a correction in wave 2, right? We do have some sort of validation on the RSI and the MACD as well, and this could well be a session where Monday, perhaps even Tuesday, we're going to see prices continue a little bit to the upside. We might get a correction actually up to wave 4 for a double top over here and then continue lower. Now, do not forget that over here I'm looking 1, 2, 3, 4, and 5, right? But also it could be a case that might turn around to be a different end in this wave 5. So we could have 1, 2, 3, and wave 4 could be like a flat pattern or so we'll be expecting to see another leg on the downside. However, just because of the RSI and MACD signals, I am more favoring that as the main scenario rather than anything else. Now, the medium-term scenario, maybe even longer term as well, do not forget that W, X, and Y could be also a case, but we're going obviously to explore that situation or scenario further down the line. For now, we remain with the wave 1 is done and we are correcting in wave 2 scenario, okay? On euro dollar, we have a similar scenario. It seems like they are moving along each other like as they should be, like there is a link between the two now. We've had a very nice move on the upside in wave 1 over here, triangular 4 and 5. Last week we talked about this and we're expecting that wave 1 to complete. Now it looks like we're moving down and it looks like this at least remain impulsive on the downside, which means that it could turn into an A, B, and a C for wave 2, guys, okay? Now, do we get any signals on the RSI and the MACD? We also get some signals on the RSI and the MACD, similar to the US index, and that is also an extra indication that perhaps that is going to play out quite well. So how is this going to play out in the very short term, though? It's still unknown, because we could get a dip 4 and then a 5, or it could be a case where this is just like 1, 2, 3, 4, and 5, or it could also be a case that this is A, B, and C. That's going to be a W, and then X and Y. Or it could also be a case, and the last, of course, this is an ABC, and we're going to start moving higher now. But I don't think these two signals on the RSI and the MACD are going to create such a shallow correction over here. I would be expecting prices to go to at least 119.25, perhaps for A, then we'll get B, and then C perhaps down to 38. 38.2 would be a nice shallow correction again. So, and it will be down to where 4 is, and then that would make a very orthodox move on the upside where we're going to get wave 3. Now, if that's not the case, as you well know, it could be like ABC and we're correcting lower because that's X and that's going to be Z. Okay, now let's quickly jump on pounds. Pound, I've had a quick look due to the latest developments because we broke above that. And it looks like to me now that is probably an ABC rather than a wave 4, because we're looking at 1, 2, 3, 4, and 5 last time. Obviously, with this break above wave 1, more likely this is that 1, 2, 3, 4, and 5 done, and this is W, X, and Y, which means, guys, because we've got 1 and 2 and 3 and 4. This is probably wave 5 for me, and we could end around 138.65, which is the 78.6 Fibonacci retracement of waves 1 and 2. From there, we should be looking for prices to start moving lower, not the chart of the prices over there. Sorry, that was my fault. And the other thing we need to really look at is what the indicators are showing. Okay, so for now, the indicators are a bit mixed. We had this signal down here, you see, and that's why we had this upside move. And now we don't see anything, but it's very likely that we're going to get something. Yeah, it's very probable that we're going to get to 138.65. And once we do that, then the RSI will be higher, and we're going to get some sort of bearish hidden divergence over here for a move on the downside. It's very likely to be the case also with the MACD, but the MACD might give us the signal on the histogram rather than on momentum. Okay, now in case again this is not the case, I mean the main scenario could be like A, B, and C and then move up, or it could be a case where it's already ended down here and this is some sort of very complicated and corrective looking upside move, which I doubt. So that's for the pound as well. Let's go to the US oil, which has been quite interesting to watch over the past few days because we received a couple of mixed signals over here. Some people think this is an impulse move on the upside and we ended the correction down here. Some others don't. Well, I'm with the ones that they don't, because this looks like an AB and 1, 2, 3, 4, and 5 to me, unless if it is an ABC. But then again, how would you consider this as a 1? It's not, it's really not looking like a 1, unless if it's like 1, 2, 3, 4, and 5. It's going to be some sort of leading diagonal, which is very rare to see. So I remain adamant to my scenario, the original one, W, X, and Y, and expecting a decline, okay? Now, it could be a case where, although we've done the 61.8 as I forecasted last week, it could be a case where this is 1, 2, 3, 4, and we're going to get another move on the other side for 5, just for a false break, and then start moving lower. But for now, and because we remain impulsive on the downside, you see that? 1, 2, 3, 4, and 5. And excuse me, that should be there, and that should be there. I'm expecting a slight correction on the upside. Yeah. And then a continuation down to around 61.62. Perhaps in the 61.20 for wave 3, and wave 5 of this is expected to end around the 60. That is going to be minute wave 1. Then we'll get 2, 3, 4, and 5 for finally see the end of the correction, which is going to give us a very nice medium and long-term trade to the upside. Well, probably, right? Now, for the time being, and as long as we remain above or below, I should say, 23.24, that scenario is very likely to play out. Okay, and let's go to the S&P. Last week we called the move on the upside to 41.64. Now, due to 1, 2, 3, looks like 4, we're expecting another one up to around 42.15. This is the 200 Fibonacci extension. And why I'm expecting this, guys, we need to look at the structures as they are given from the market. So this is wave 1, clearly, right? This is 2. Over here, though, you know, we don't have, it's not like to have a clear 5, because you've got 1 and 2, then you've got 1, 2, 3, 4, and 5. You understand what I'm saying? So that means we're going to get a 4 and a 5. 42.15. From there we correct, and then we'll move higher to 42.99 or anywhere above the 42.15 in order to get wave 3. Now minor 3 could go up to 43.83 because that's the 100 Fibonacci extension, yeah, of the upside leg. Like we're talking about the intermediate degree move, right, rather than anything else. And from there, 46.37 would be looking like a very nice local high, or perhaps even an all-time high, where we should, or not should, actually should, we should start looking at signals for a potential reversal on the downside. Until then, it's likely that we'll move higher. It's not going to be a straight line, so expect some shallow or even deep pullbacks. Until tomorrow, trade safe, guys, and if you have any questions, please feel free to ask on our YouTube channel, Markets and Waves, and I will get back to you as soon as I can. And enjoy the trading session, and we will speak again tomorrow.